Good morning, good afternoon, and good evening, everybody. Welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be here with you today. Today's episode is I get this question a lot from people that are coming over into the note industry from some other niche a lot of times, whether it's wholesaling or fix and flipping, or they've left their job and are looking to do something a bit more passive, or they're looking really into a bigger niche, broader niche of note investing. They like the idea of notes, but they're not sure on which way to go. And you usually get this a lot from a lot of folks that have a sizable chunk, inheritance, retirement, 401k, SDIRA, whatever it might be, that they're looking to put to work of their own funds. And they're always like, what should I focus on? What's right for me? Is it performing or non-performing notes? And there's pros and cons to each side. So I thought I would take the time. I realized from looking back, I haven't answered this question in quite some time. So I thought I'd take the time to put an episode and kind of give you some bullet points on each one. And then you can make the educated decision to decide where you want to go. As always, I encourage you to book a phone call with me at talkwithscottcarson.com. That's talkwithscottcarson.com. I'm always glad to chat with you if you're brand new to this, to help give you some counsel, to point you in the right direction. Because, performing and non-performing or reperforming, they may not be right for you. Three may be right for you, but maybe only one is right versus the other two. And I will share a couple of mistakes I made early on throughout this so that you don't make the same mistake that I did. Depending on where you're at in your trajectory, where you're at in life, what are your long-term goals? We'll discuss that in today's episode. Performing versus non-performing notes, what's right for me, everybody, all right? Now, the first thing we'll talk about is performing notes. Performing notes are pretty simple. Performing means the borrower is paying on time. That's what the definition of a performing note is. It's been originated and it's performing on time. Now, I do not count. Here's one big thing in here. This might piss some people off, but you know me, I'm not afraid to shake it up. A brand new, newly originated owner finance note that's newly originated is not performing. I know that's going to, oh, what? Look, I don't count a newly originated owner finance note as performing until they've made a couple months of payments. I'm not going to even look at an owner finance note that's originated with no seasoning, no third-party servicing company, okay? I'm going to want to see that they are actually performing on time. How much down payment did they make? How much emotional equity or down payment did the borrower have? The more they have, the merrier, which is great. The lower LTV, the better. But for me, a performing note is where a borrower is making payments at least 12 months. All right. They're on time. And here's the thing. Performing notes provide a very steady income, and it's mostly going to be passive. By mostly, I mean you're still going to need to communicate with the servicing company. You still need to go out and kind of find these deals, do some of your due diligence, double check the servicing, make sure you have a servicing company, some other things set up, and then also making sure to touch base with your servicing company to make sure that the borrower is paying on time every month. You should get a report, and that report should get a wire in once the borrower's done, but the whole buying and transferring, get to the point where they're making you is where you're going to do. That's going to be a little bit of not heavy lifting, but some lifting on the front end side where you're going to need to go find that deal. And you can find these deals on some platforms. Other sellers are selling performing notes. Most banks are not going to sell a performing note. I'm going to tell you that right now. I get some people that come in, I want to buy the note on this house here in my neighborhood. Well, if the borrower is paying on time, or if it's your house, because I get that probably more often, I want to buy the note on my house. Well, as long as you're paying, the borrower's not going to sell you a one-off performing note. So don't bother trying to reach out to the big banks to really not only buy performing notes, but non-performing notes. The bank has zero incentive to sell a performing note off of their books for the most part. But you could buy plenty of other performing notes on owner finance stuff that was once non-performing, or people who have originated notes and they need to sell it off. You can also buy performing notes from like hard money lenders on short-term stuff. I mean, the great thing is if you're looking for a great ROI, or I should say a decent ROI, depending on where you're at investment-wise. I know a lot of folks that like doing the fix and flips and make big chunks, and it takes them a year to do one deal, or they do a deal in 6 months and takes them another few months to find something. So if they made a 16% return on one deal, but their money was only out for 6 months, it's really an 8% annualized return. So this is something that's more passive. I know plenty of hard money lenders and people that lend in hard money funds want to make a 8+ or greater return. A lot of private lenders lending their money out making 12% or more. That's totally fine. It's a performing note, okay? If you're coming into the real estate and you've got some money, a lump sum, this might be ideal for, especially if you're just looking at to put to work. You don't want to create another job. Like if you've got some retirement and you want your retirement to be, more reliable and make an 8 to 10% or greater return without the up and down of the stock market, you can make reliably 8% or greater returns in performing notes. If you've got a self-directed IRA or a rollover 401k from a previous employer, you want to put it in a self-directed IRA and put something to work where it's getting a good return. This is great for self-directed investors. Buy something, set up the paperwork. You can buy the note. You'll need to provide copies of the collateral, copy of the note into your self-directed IRA company. But that's a great way to start getting above average returns. No matter what the amount is in your IRA, you can find small balance, medium size, even larger balance notes that are performing from funds or other originated paper products, okay? And you can do short-term. Short-term would be more like a hard money loan, or you're lending, private lending to other investors on fix and flips, or you buy a longer-term note that's been around. It's a 30-year note with a balloon, or a 20-year note that you're buying from somebody who's owner financed a house, or buying from some a fund or a bank fund. We do see performing notes that were initiated from like a lender or a mortgage banker that you could buy that might be scratch and dent. And by scratch and dent, meaning that the borrower is not paying, or not, sorry, they are paying on time. That's what defines a performing note. But maybe there's a document or two missing, or the lender was going to sell it to another bank, and unfortunately the borrower's credit need to be 680, maybe it was 660. Or there may be some other little document things. The note's still good, borrower's still paying, you still have the right to foreclose if they stop paying. But that would be a longer term note than 12 or 24 months. Performing notes can be treated as regular ordinary income unless and you're going to pay taxes on that, unless, of course, you're using a self-directed Roth IRA, and then that's tax-free. Or if you're using a traditional IRA, it's going to be tax-deferred when you pull that money out, okay? But performing notes, you're just buying the note. You're going to be paying somewhere, probably 80, 90, 95 cents of the dollar, depending on what the underlying interest rate is, depending on what kind of rate you do. So I always like to figure out, okay, what kind of return do I want to make on my investment? And that's what I'm willing to pay for that performing note. And look, there's plenty out there, and you can buy performing notes starting at 25, 30 grand and up from there, up to upwards of millions of dollars. We're actually working with a fund right now who's got 10 million, and they're looking to buy a pool of performing notes at a 10 to 12% greater yield. And they want to mix it with some short-term and long-term stuff, and we're going to be able to help them fill that in the next few months. So something great about that is buying an aspect of performing notes. It's kind of passive, hands-off. Once you get it set up, it's not like the set it and forget it. Wrong coup dining thing, but it's definitely a great tool or strategy if you're wanting to be this very more passive, more enjoying your retirement. You don't want to spend a lot of time going out and finding deals or funding deals. This would be a great way to buy it, get the steady returns coming in, whether it's interest only or you're doing a full PITI. If it's a full PITI, your principal is going to be returned to you over time. If it's just interest only, you're just going to be receiving interest, and at some point that borrower is going to refinance you out and pay it off. But yeah, performing notes, great if you got some capital and you don't want to do, you don't want to be very active. You don't want to do really any work. Once you get it set up, there you go. Performing is the way to go. Now, non-performing, it's a little bit more work, but it's a bigger discount, because a non-performing note is a note where somebody has stopped making payments. Now, by stop making payments, I mean they're really seriously, they're in default, okay? And there are quite a few borrowers in default across America. A couple million borrowers are in default right now. And by non-performing, they're greater than 90 days in payment. So they've missed 3 to 4 months of payments, okay? Now, the great thing about buying non-performing notes, you're usually going to get those at a bigger discount, which if you end up working that out and get the borrower back on track to paying, or you end up taking the property back and foreclosing, can lead to higher returns over time. If you're looking at notes where they're still occupied, you have the potential to get them back on track, to be performing for steady cash flow for a period of time. It's forgiving the borrower some back payments, or forgiving them for being late and working out some sort of payment plan to keep them in the house. That's really the best bang for the buck. One of the biggest mistakes I made early on was buying non-performing and not willing to work with the borrowers. I was looking to foreclose everything, not giving them an opportunity to get reinstated or modified or do a payment plan. And I was paying out monthly payments towards servicing and foreclosure costs, not getting anything in, and then I'd have to rehab the property if I didn't sell at the auction. Okay, so it's a little bit longer time frame to get some checks. If you're looking for passive income, non-performing notes would not be where you want to go. All right. If it's vacant assets, you're more likely not going to get the borrower back on track. It's going to be more what we call a deed in lieu or friendly foreclosure, cash for keys. Those can be very nice with larger checks, not steady income. ROI is great, can be a higher ROI, but it's going to be a longer term time frame. Most of the time it's going to take you 90 days or longer just to start the foreclosure process if it's not began. And then it may take, in some states that you buy in, it may take a little bit longer to foreclose, whether it's judicial foreclosure. I would just not, there are some states I would not buy in for non-performing notes, those primarily being New York and New Jersey. I would also avoid markets like Chicago, which is difficult to foreclose in if you're an out-of-state investor. A lot of people like to focus, if they're going to be on non-performing, focus on non-judicial fast foreclosure states. That's great. But there's also some great opportunity in some of the judicial states too to foreclose and just avoid the longer 12 plus month stuff. And then obviously you're going to be doing due diligence on the borrower, the property, and the paperwork. You're going to be doing that same type of due diligence on the borrower, the property, and the paperwork on in the performing side as well. Okay. You are going to spend more time working out these deals, talking with servicing companies as they're communicating with the borrowers, trying to do workouts. Be talking with the attorneys in the foreclosure process. Sometimes it's fast. Other times it can be drug out as the borrower fights you. I like non-performing. It's kind of where I've made my niche, is buying the non-performing side. I like buying at a discount. I like buying occupied assets so that I can get the borrower back on track and become a re-performing note. It turns into good yields. And I'm going to buy in a state that if I'm going to foreclose, I'm going to make a pretty good return. All right. It's very important to be doing either of these. You need to have licensed servicers and attorneys helping you out. We'll talk more about that. Okay. Now, we've talked about this briefly, re-performing notes. This is an alternative to non-performing. It's also an alternative to the performing side and can be a higher yield, higher ROI. It's basically where a non-performing note has become performing, where the borrower has approached the lender. You've bought the note at a big discount and approached the borrower, and no matter what kind of financial hiccup death, maybe not death of theirs, but death of a loved one, job loss, sickness, health, whatever, that borrower is ready to and willing to start paying on time. These can be higher mid to long-term returns. I'm not opposed to buying non-performing, get it back working and getting cash flow for a period of time, 12 to 24 months, and then turn around and selling it back to investors who are looking for reperforming. This is where you would look at a 12 plus yield. You're going to want, though, if you're buying reperforming where their borrowers has made 6 to 12 months of on-time payments, where they've been performing for a period of time. They've also going to want to see some skin in the game from the borrower, where the borrower has brought some money to reinstate the loan or to work to reinstate the loan as some sort of trial payment plan. We like the bigger the repayment or the skin in the game, the more likely they are to perform and stay on time. Look, we all know COVID happened. We all know bad things can happen, and everybody goes through a hiccup at some point in their life. When you have 85% of the United States basically one missed paycheck away from a hiccup, that tells you a lot. Okay. Now you're going to see this is going to be not as great a discount as if you're buying a non-performing note, but it's also should not be as much as you're buying on a performing note. Performing note is probably going to be 90, 95 cents. A reperforming note can be anywhere from like 75 to 85, maybe even 90 cents on the dollar of the unpaid balance or legal balance, whichever is less, depending on what kind of yield you're looking for. Okay. You're always, though, with reperforming, double check that the taxes have been paying. It's one part of due diligence important. And then always making sure that the borrower has either reinstated or kept their insurance on the property current, or also if the note seller has what's called forced place insurance and the borrower is reimbursing that insurance. Maybe the borrower can't afford to get the insurance, so it's being reimbursed on a monthly basis. But making sure that when that note transfers to you, that the insurance as the payee is either transferred to you or your servicing company. Okay, great stuff. I like reperforming notes. Nothing bad at all about that, where somebody has fallen behind. As once a distressed borrower back in 2002, I was glad to get back on track with the opportunity that the lender gave me, and that makes for a pretty good deal for you if you're looking to buy some or invest some money that can be semi-passive and semi-active. Reperformers can be a pretty good aspect of things. Just doing a little bit more due diligence, and it can be a great payday for you if you're willing to spend a little bit more time on the front end. Okay. Now, what are your goals? I always talk about this is one of the most important things when you're talking to somebody, when you're thinking about this. How active or passive do you want to be? If you don't want to really do any work, you just want to get paid on a monthly basis, then I would say extremely close to the performing note side. Of course, there's times when even the most invested borrower will default on things or stop making payments for things. You're still going to need to understand what's going on and still need to communicate with your vendors, your servicing companies, to reach out to that borrower to get back on track. You should not be doing that no matter what niche of the notes you are, whether it's in performing, non-performing. Put your servicer to work. That's what you're paying for, $35 to $95 a month for your servicer to do that borrower outreach, to keep them on track or get them back on track. Another one is always important. How are you financing your note purchase? If you're going to be using your own cash, retirement account, savings account, you can do whatever you want, performing or non-performing. If you're going to be using other people's money and you need to deliver an 8 to 12% return to your investors, and they're okay with you having the money out for 12, 24 months, the non-performing is probably going to be the route that you want to go. That's not saying you can't find performing notes or reperforming notes. That's one that you definitely should look at doing, especially if your investor or funding partners are looking for 7, 8% return. You can go find reperforming notes at a 16 yield, get them involved, get some cash flow coming in, and go from there. Like I said, it's all about what your long-term goals are. If you're looking to create cash flow, performing, reperforming, even owner-occupied, non-performing that you can get back on track, be great for you. If you're looking for assets, okay, or you're looking for rehabs, then your non-performing side is where you're going to go. But there's nothing that guarantees that if you buy that non-performing note, that you're going to actually take that asset back as a rehab or as an REO or foreclosure, unless you go through the foreclosure process and it doesn't sell. So there's some tricks and tools to that. Make sure to reach out to me. As always, double check your taxes that are doing all these things. Make sure the taxes are being either escrowed or being paid. That's one thing, especially if the taxes and insurance are not escrowed, making sure that the borrower is paying the taxes, because that wipe you out no matter whether they're performing or not performing. And like I said, what's your big focus is? Should still always be cash flow. I'm a big believer in not working so hard, but it's also, if you're looking to acquire some asset growth, that's a great thing. Just be careful of where you're at, because if you're just targeting notes for assets in your backyard, that may not be the best strategy for it. And as always, double check with your accountant and stuff like that. Buying non-performing, turning into performing does have different consequences of being a short-term capital gain if it's done in less than a year, versus a long-term capital gain where you just do a trial payment plan on the front end and then modify it permanently after 12 months. And of course, if you do foreclose in under a year, that's going to be a short-term capital gain. So maybe you want to drag that foreclosure out to day 367 versus day 365 or less. All right. Now, what do you need? What do you need to have in place in here if you're starting off as a new investor? You got to have an entity, a limited liability. You need to buy a trust or a self-directed IRA of some sort to buy in. Do not do this in your own name. That is not a good thing to do. Even with a self-directed IRA, you could just have your account number labeled and not your personal name attached to your self-directed IRA company. You want to have a licensed servicing company collect your payments, do the borrower outreach. And like I said, it doesn't cost you from $35 to $95 a month, depending on whether it's performing or non-performing. It's always good to have a real estate attorney to handle that this license in the state you're buying in case you do have to foreclose. That's one definitely thing you want to have, is have now your servicing company can help you with your real estate attorney in those states if you don't have one. So don't let that stress you out. Okay. Of course, you need cash or funding partners, and that's a whole different ballgame on how you secure that or what you pay them and how you secure your OPM. It's always important, never buy a note in a state that you do not understand the foreclosure process. The great thing, foreclosure processes are not hard to understand, but they do vary on a state by state level, with as fast as being in Texas or Georgia, or as long as New York and New Jersey. Every state has its pros and cons. And as always, know your due diligence of your note. Like I said, you're going to be checking the borrower, you're going to be checking the property, and then also checking the collateral of the loan file to ensure that you're buying a profitable note and it's truly a deal and not a dud. Now, there are a couple different ways that you can learn how to get involved in this. If you're kind of just getting in and wanting to stick your feet wet and getting started, I highly encourage you to check out our monthly class, Note Weekend, at noteweekend.com. We teach this once a month, usually at least 2 to 3 times a quarter. It's free for you. If you go to noteweekend.com, you can sign up for the next class and learn. It's a great Cliff Notes version, about a 3-hour class of where we share with you how to find, fund, and flip. And then if you're really interested in taking that class or do a deeper dive into non-performing and becoming a full-time note investor, then I encourage you to check out our quarterly class. It's a 3-day workshop. And we split sometimes between doing it in person here in Austin, Texas, or doing it online via Zoom. And you can get signed up for that at notebuyingfordummies.com. And it's a much deeper dive into the fundamentals of finding deals, raising funding, and then the flipping and exit strategies and making money of it. And we'll obviously dive in and do some case studies, lots of making sure, breaking down tapes, identifying the profitable deals, whether it's performing you're looking for or the non-performing side. We spend a big chunk on that. And the class for that starts at $497 for the virtual class, and you need to get signed up for that at notebuyingfordummies.com. Or you can go to our website and check out both classes at weclosenotes.com and look under the training tab. And yes, many people sign up for the one-day class to get started. They see that they like how we teach, and then they sign up for the longer 3-day class. And no, you do not have to wait, because we do provide replays to both of these classes immediately upon signing up. So you don't have to wait till the next monthly class. You can get signed up today, get the replays from the past class sent to you, along with the 3-day class. Don't have to wait till a month now or 2 months from now. You get signed up and get the replay sent immediately to your inbox to start learning today, so they can go out, take some action, put some money to work, and start making high returns and decide what's right for you, performing or not performing. Thanks again, everybody. Go out, take some action, everybody, and we'll see you at the top. Bye. Hey, real estate investors, this is Scott Carson. I'm known across the country as the note guy, and I've been an active note investor focused primarily on the niche of non-performing notes, distressed mortgage notes, and residential commercial properties for almost 20 years now. My company is weclosenotes.com. And I know there's a lot of different things when it comes to the note world. Are you buying performing notes? Are you buying owner finance notes? Are you buying institutional debt like I would focus on? Are you buying first, seconds, contract for deeds? There's a lot of questions. And it can be very confusing about what you can or cannot do. So one of the great things that we've hosted for the last couple of years that we do on just about a regular monthly basis is we host our one-day class called Note Weekend. If you go to noteweekend.com, you can register for our free 3.5-hour class. We'll talk to you and share with you how you find, fund, and flip non-performing notes. And yes, you can buy non-performing notes from banks, hedge funds, and a variety of different hard money lenders out there for your own portfolio. No, you don't have to have millions of dollars to dive into the non-performing note game. We've got students that have bought plenty of deals with 25, 30 grand, getting their ball rolling, using their self-directed IRA, who are tired of dealing with toilets, tenants, trash chests, tired of battling contractors and GCs to get properties rehabbed. We all know the market is changing. And while it may not be like 2008, 9, and 10 again, we do see a lot of distressed debt out there on both the residential and the commercial side. So if you're thinking about diving into the note game, becoming a note investor, a lien lord, as you like to say, versus a landlord, or you just want to figure out what it is about the sexy side of real estate in the note space, well, check it out, noteweekend.com. Doesn't cost you anything. We host it live, usually the first or second Saturday of each month. You can go today, register at the website, noteweekend.com, register for the next live class that we host. You'll get sent a replay of the previous class so you can start learning about the note business today. No questions asked, no credit card needed. This is a great way for you to dip your toes in the water and see if it's warm, because I guarantee going through our one-day class, you want to dive into the deep end and become a note investor. So check it out, noteweekend.com. You can also go to our website, weclosenotes.com. Check out our podcast, check out our #1 YouTube channel. We are here to help support you. Whether you're an experienced investor or you're brand new to investing, Note Weekend is a great place for you to get the ball rolling. People often say we cover more in our 3-hour class than most people cover in their 3-day class. So check it out. Love to have you be part of our Note family, but get signed up today at noteweekend.com. Thanks and have a great day. Hey, real estate investors, this is Scott Carson. I'm known across the country as the Note Guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing deals. We get the lists of notes from banks, hedge funds on a regular basis, not 1 or 2 or 3 or 4, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day one is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day two is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day three is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilet sinks and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.